Hello, Tariq sir. Am I audible?
Hi, yes, you're audible. Am I audible?
Yes, yes, loud and clear, sir.
Okay, awesome.
All right. Cool. Great. So let's quickly begin tonight's show. I was very much looking forward to tonight, and very kindly, how nice of you, sir, you accepted our request to come and join us. I've been reading your tweets for a while. I've been reading your blogs for a while. And I can honestly say I'm a big fan. The way it's not just about how deep your research goes, it's also about how creatively and how fun you make that reading. You make that reading make.
Thank
And
you.
right from your I like your Mahindra article, sorry, Hero MotoCorp article, your Delhi Very Well article. These are absolute gems, and for every investor, especially retail investors who come into this stock market and they are new to this world. For them, this is very interesting to read, and it's very stock market for a person who is not into stock market, it's a very dry subject, but your articles and your tweets and your content makes it so much fun. So a big thank you for that to you, first of all.
Thank you. Thank you. I'm just trying to write
uh
whatever I find interesting.
yeah, that's really amazing, sir. Right. So आज का सर हम लोग of course we'll try to learn a lot from you, and also we would like to learn about you. But before we go there, let's quickly एक बार थोड़ा सा market view. You also track a lot of factors, I think, a lot of indices, a lot of foreign markets. So before we get into, I want to know from you, like, how did you get into stock markets and what is your philosophy, investment philosophy, and everything. But before we get into that, thoda sa market ka discuss if we can discussion if we can do. And what is your view on the market right now? And for a while there was a very decisive split between investors and traders on social media. That market, some were very bearish, some were very bullish. But as of now, it seems that bulls are kind of holding on. But what do you think? What does your analysis say right now, sir?
Sure. So I'll put a caveat there. I'm not really like I may have a big following, but I don't consider myself a very big expert or anything. I'm just following whatever I read about and try to make sense out of it. So I also do not try to guess everyday short-term moves. Uh, in my view, if you look at the larger themes, there are only like two. One is inflation, and other one is recession due to it. Inflation in India, I don't think is that big of a problem. Majority of inflation is around because of oil and food prices. So food we have largely have under control. We have our own supply. We feed ourselves. But oil is something which is the completely opposite story. In the short term, medium term, oil may kind of come down, and that might lead to some breathing way for our emerging markets. So in that regard, I feel inflation is pretty much under control within the emerging markets, and I've written a piece about it as to why it's out of control and out of whack in Western countries. With regards to Western countries, the other big theme is the recession, which I feel they will enter into it. It's all very dynamic and depends on how Federal Reserve acts throughout the course. If they follow a pre-70s approach where they raise rates and stop, and then watch what happens to inflation, and then they raise again rates again. That's a very haphazard way of dealing with it. So where the other way is you continuously raise rates irrespective of whether inflation is taming down or not, and hope one day it kind of comes down, which is known to kind of work. That's what Paul Walker did in 1970s when he took charge. It's all very dynamic in that regard. I do think that they have kind of not been proactive. So there will be some sort of a slowdown in the next 12, 18 months in US. How deep is that slowdown? Whether it leads to a big recession or just a tiny blimp, it depends on all these dynamic factors of what Federal Reserve does, what's the demand supply situation like across. But in the short term, I feel emerging markets like India will do much better. We may not see the ferocious bull market that we saw in 2021 for another 12, 18 months. So my viewpoint is until elections of 2024, there may be kind of a okayish kind of a market, not a very high raging bull market of the 2021. But after the elections, when clouds clear away, everything might be in a better shape and form. So that's when things can be good. Uh, but again, like this is just an individual's opinion. I'm not a macro expert or anything. This is based on my readings of and my judgment of things that I read.
Absolutely brilliant, sir. Thank you so much for sharing that with us. Right. So now let's get down to knowing you a little bit, and which I'm very much looking forward to. How did you reach here, sir? How did you get introduced to stock markets, and how did you come to be who you are today? How did your journey into stock markets begin, and
So
what happened all across?
yeah, so finance has always been pretty like one of my favorite subjects. So, and more than finance was around business. My dad is a businessman, so as a kid, I was always kind of wondering as to what makes a good business better and how do businesses work. So that kind of that curiosity led me into this world, and uh, I chose finance, study finance in high school, did that in college. Uh, Pursued my CFA, got into Goldman because of all of that. Stayed with, and throughout the 6, 7 years at Goldman, I kind of refined it a bit more. And then I kind of left Goldman, and now I work for Visa, the payments company. And so it's been a journey, and it's always something that's been very exciting to me. Um, uh, so yeah, that's pretty much. And over the last, I would say 10, 12 years, I've been continuously studying this field. So that's been that helped me kind of understand things a bit better.
Right. Awesome. Awesome. And sir, so I believe so. The kind of things that I've read on your blogs and your tweets, I think you're primarily very much common sense investing slash fundamental investor. Uh, but how would you describe your? But of course I've also seen you also look at charts and some technicals as well.
Yeah.
But how would you describe your investment and trading strategy slash philosophy? Uh,
I would say I don't belong to any camp. I try to use my main goal is to I have a for me investing is about my financial journey, and I have a set goal in mind that has always been there even 10 years ago. So over the last 10 years, I'm basically chipping away and slowly kind of making incremental progress to that goal. Charting, technicals, fundamentals, all different sorts of investing, growth, momentum, value, whatever, is all just my way of kind of using all the tools at my disposal to get to that goal. So I don't limit myself. I don't look down upon other uh, things about other philosophies in investing. Most people think like value investing is the only way to make money, and if you're not holding a company forever, you're doing something sinful. I don't believe in that philosophy. I try to use everything. I do short-term trades. I even look at mostly I try to my goal is to figure out good businesses that I can kind of uh, so and we don't even have a large enough universe. We have like 1,200 companies above the range of 500 crores in market cap. So if you within those 1,200, if you remove all the government-run entities, if you remove entities without which have governance issues, your universe keeps on getting smaller. So my goal is to kind of study that universe, which I seem is feasible to study in a decade, and that's where I'm trying to figure out basically, and rest everything else is kind of just on top of that to help me understand things better. Like technicals, for example, are very good to figure out uh, when the price may correct a lot versus what's the correct price to buy. Because I don't believe technicals show you a forecast and things are like that, but they can very well tell you about what's the levels of prices where there has been previous demand. So there's a pattern there, and that those are probably good prices to buy. So if you combine all of that, it kind of helps you become a better investor. Okay.
right. Awesome. Awesome. Thank you so much for sharing that, sir. So if I may ask, what is your, so you said you take all kinds of trades from short term to long term and everything. But majorly, what is, do you have a favorite time horizon? Maybe ki you would do some 3 to 6 months or something like that, or that is also completely depending on the scenario?
Complete depends on my usually 90% of my book is long-term investments. So I look at long-term in nature. That's the first. Everything else is kind of just very short. Like 10% of the book may be short-term or uh, hedging or FNO trades, and those are mostly to kind of help me build more cash to again feed on the 90% long-term investments.
Right, great. Okay, next question is, so you already said, kind of told us ki, you have like, you go prefer companies with some good market cap of over 500 crores, and then some fundamental factors ki, they should have a good governance and everything. But in general, could you estimate what would be the size of one, what would be the size of your watch list that you kind of keep an eye on? And second, how many companies? So this is a question which I really want to ask every expert that I can ask about portfolio sizing, as in how many companies do you prefer to stay invested in at a time? So from receiving answer, some people prefer a very concentrated portfolio that they have to churn something out if they want to buy something new. And I've also met some experts who have even gone up to 50 companies, or my personal favorite, Peter Lynch. I'm a fan of Peter Lynch. He too went ahead with like 1,500 companies at one point in his portfolio. So, do you have a sizing strategy around that, sir?
Sure. So I'll answer the first question first around watch lists and stuff. So um, I have about core watch list of 40, and that keeps evolving. So what I'm doing these days is kind of looking at all the companies and one by one trying to, like I said, if it's a government run entity, I immediately remove it. If it has previous governance lag, I immediately remove it. So that list I'm going through. So in a way, earlier I used to look at uh, run screeners and then find stocks or some stocks that my friends might be talking about or other investor friends might tip me on. I used to include them. Now I've kind of gone the other way. I'm taking the entire universe and can using the process of elimination to arrive at a list that I need to study of those companies. That's one. The other is around number of stocks and allocation. It depends on yourself. So it depends what kind on your risk appetite. So you mentioned Peter Lynch. The reason why he used to have 1,500 companies is because his portfolio was value, the assets under management that he was managing, couple $1 billion, was very huge. And his way of investing was he would buy the entire companies in the entire value chain. So, for example, auto ancillaries are the rage these days. So he would buy every auto ancillary company that he thought was fit enough, and then with a very small allocation to all of them, and he would sit and watch as to which companies will do better. So as and when the fundamentals of the company starts improving, he will sell the ones that had deteriorating fundamental factors and keep allocating more to the ones that were doing well. So that his process was again a process of elimination. He bought the entire thing and then looked at what was doing well. He could afford to do that because he had that much AUM to manage. If it depends on you, if you, for example, you have only 10% of your wealth allocated to equities, and you uh, and that 10% may, let's say, mean 10 lakh rupees. If you're buying 50 companies of that 10 lakh rupees, that is not a very good strategy for you because first of all you only have 10% of your overall wealth allocated to equities, and within that you're kind of diversifying it even bit, and that capital is not that big enough to make any meaningful returns if you diversify and chip away a lot. So whereas someone who has, let's say, 100 crore portfolio and is allocating 50% to equities, now for him investing into 10 or 15 companies may not be much more riskier. And his goal might not be to generate 20 25% kind of returns. His goal might be to generate 10 to 12% CAGR kind of returns. So for him, having a concentrated portfolio doesn't make sense. So it's all context related. It depends on what your goal is and what your risk appetite is. And then you kind of need to decide whether you need to have 10 companies, 6 companies, or 50 companies. Um, so yeah, that's my long answer.
Right. Great, sir. Thank you so much for sharing that. Okay, next question, sir, I want to ask is about your exit strategy. So, a lot of people have a lot of things for entries. I also do, but I fail miserably at my exits. What is your exit strategy? How do you decide when to exit?
Yeah, so I that's one of my biggest problem as well. I have been known to not sell on time, and that's something that I've been learning. I've started taking use of tech, help of technicals, and when there's a breakdown of a trend or something, that's where I look at things. It also depends on valuation. Sometimes things are very clearly overvalued. At that point of time, you have to make a call whether even if you don't like, I at least stop allocating more to it. So I don't have that habit of continuously buying at irrespective of any valuation. So even if you're not getting out, the best way is to at least you can put like a very deep stop loss based on charts, where if something goes very, very wrong, you at least get out at 10%, 20% drawdown rather than 50% drawdown. So that's one. Other than that, fundamentals is something. If something goes wrong in the company, something, the story or the thesis I set for myself before entering into the company as an investment, if that goes wrong, then that's a clear out. And then I never kind of average down my losers. If something is going to a loss, it's either you need to stay in the portfolio or it needs to get out. That's the only decision. The third decision is not there that you need to buy more. So that's where I would say. But it's a very complicated area, especially for me. Like I am still learning when to sell. I have not mastered or perfected that yet.
Right, perfect, sir, perfect. Thank you so much for sharing that with us. Okay. Next that I want to ask, so this is now again we come back to thoda sa contemporary times, and so now next question, whatever we discuss is not a buy or sell recommendation. This is all for educative purposes. But according to you, right now, what if I may ask, what is there on your watch list right now? What is getting you excited right now? It may be sectoral wins that you see somewhere, or it may be any particular stocks that are you think have a good potential. And thoda sa, so the purpose of asking this question is to kind of understand your process a little bit more. So the way when you tell your watch list, I would also love to know ki, why do you think this is gonna be good in the coming time?
Sure. So my watch list mostly has special situation stocks in it and tech companies in US and some tech and auto companies in India. And I am a very boring kind of investor. Like my largest allocation these days goes to the Nasdaq index fund. So I'm buying the index and with the view that so these all companies are like at very, very deep drawdowns. Uh, so Google, Amazon, and all of those top firms, they're pretty like they're very good companies. Obviously, they have stable growth, and it's not like that growth is going away anytime soon. Uh, but they are pretty cheap, so I allocate there. A couple of special situations that I'm working on is those. Some of the companies in India, it's not very sector specific that I have to invest in this sector only. It's all very bottoms up company specific. So
May I have one or two examples, if I may, sir?
Sure. So, companies like Piramal, for example, is pretty cheap. There's again not a recommendation. I hold a position in it. Uh, I like companies like DVs, for example. If you look at the long-term 10-year chart of valuation history of DVs, it's pretty much at the bottom of at the mean level, where so it's the entire value has been reverted to mean. So that's where I've been investing. And these are companies which have consistently grown their cash flows, have grown their sales and profits, have very good governance history. So very boring kind of investments. In Piramal, for example, I'm invested mostly for their pharma business that's going to demerge. I don't consider it a special situation, but at this price, I feel that the pharma business is valuable and I'm getting a bargain. So that's where I've been invested. So it depends on company to company, and that's two or three examples.
Right. Great, sir. Great. Thank you so much for sharing that. So I have a lot more questions with me right now. But before I continue there, I had pinned a tweet in this space asking our audience to ask any questions they may have for you. So we have got a few questions. So let me take up their questions first, and then बीच में अगर मेरे को time मिलेगा तो I'll ask my other questions as well.
Sure.
Okay. So sir, पहला question हम लोगों को सुरेंद्र सर का आया था. He wanted to know about paper industry. So in case you're tracking this sector or any companies from paper industry,
No,
do you have a view on that?
I don't track this sector.
Okay.
I follow, there's this advisory service called Aurum Capital and Jitin Parmar and his team. So I kind of just follow them. They are better. Like, so in any, so I have very few core competencies, and my way to get around it is I would rather subscribe to the guys who know this place better than forming my opinion on my own. So I have identified over the last few years in each, like for cyclicals, who's the person to listen to, for pharma, who's the person to listen to. So that I kind of follow that, and if they have any advisory or paid service or newsletters, things like that, I'm happy to pay for it as well. So that's I kind of broaden my research circle that way.
Great. Thank you so much for that, sir. It's refreshing how brutally honest and down to earth you are, and so open to sharing your practices.
Yeah.
Right. Sir, next question is from Ujjwal sir. He has asked view on sectors or stocks to play the mega trend theme.
It depends on mega trend thing we're talking about. These days, is everything like if you look at a 10-year history from here, everything seems like a mega trend. And for example, cloud computing is going on. Biotech will be something that will occur. Battery technology is something. There's a lot of things happening in semiconductors. So it depends on what theme you pick at, and then it depends on whether those companies are listed in India or you're okay to invest abroad as well. So within India, I think two mega trends are playing right now, which is manufacturing. We will go through a manufacturing renaissance in this country. That's inevitable. We started, every kind of country goes through, it's first an agriculture economy, then goes to manufacturing, then goes to services. And that's how they rise. That's been China's theme as well. That's been other countries' theme as well through history. But India kind of flipped it. We did agriculture, then services, and now we are kind of building that manufacturing infrastructure base. So that's one. Then you will have in that manufacturing theme, you have all sorts of manufacturing in India, from chemicals to CDMO to discovery, drug discovery to infrastructure to textiles. So you will kind of see India coming up through, and as a global percentage, low single digits of these manufacturing is done in India. So even if we kind of double it from here in the next decade, that's a very big market that you're looking at. So I think that's the main trend in India and main mega theme that you can talk about. Other than tech side, IT side, we have always dominated and we'll continue to do that. On the services side of it, you may also see a lot of new global technology businesses from India kind of emerging and getting listed. So companies like Delivery and all, they're not just thinking of themselves for an India land base, which earlier used to companies to do. They are also going to Southeast Asia and kind of starting to dominate there as well. So you will see companies from India emerging, selling products to a global customer base, or at least dominating the Southeast Asia region of it. Those, I think, two or three structural themes from India.
Great. Absolutely brilliant, sir. Thank you so much for sharing that. Great. So next question, sir, Deepak sir ka hai, and he has asked about. We kind of slightly touched on that, but he's asked your thoughts about index funds.
I think they're brilliant, and I personally invest a lot through index. Like I mentioned, my largest position is the Nasdaq index
Yeah.
excels today. And if let's say I know a lot of people are not this finicky about and this passionate about finance. I believe that for 90% of the people in this world, the easiest way to build wealth is through index. Uh, it has its own nuances around it, but if you want a low cost, low effort kind of a way to do it, uh, you can never go wrong in an index fund, as long as you're in a country which has growth. So that's a pretty good way. I think India is growing, so US has grown. There are other indexes as well in Europe which has the economies haven't grown that much, but the index has kept up with it. So I think it's a very good way to build wealth.
Perfect. Thank you so much for sharing that, sir. Next question, sir. Pahadi sir ka aaya hai and he has asked, any recommendations on how to mix technicals in our investment journey? Any good sources for beginners? So there also we kind of touched, but specifically to this question, if you have any thoughts, sir.
Sure. So I'm not a technicals expert. I'm learning. It's only been, I would say, 6 months since I have really started to learn in this area. But in so the way I use it today is to identify price action through it. I believe technicals are a visualization of demand and supply for a stock, or it can be any instrument. And if you look at the history of it, you can easily identify areas where there's clear cut demand, where stock has, like, for example, at a particular position, at a particular price level, the demand of the stock usually is higher, or the supply is higher. So those kind of things you can figure it out. So that's where I use to come with my investing to figure out areas to average into if I want to, and areas where things kind of look shaky. If something breaks down in a particular price level, it's a free fall after that. Uh, so those are the areas where I use. I believe the best way to learn is to always go to the source. Unfortunately, in our industry, there's a lot of versions of the sources, a lot of noise. Everybody has an opinion on it. So I always go to the golden sources, which is fundamentals, in my view, are the CFA books. Even if you don't want to pursue a CFA or get a degree or a distinction in CFA, you can still go through those books, and they teach you from the very basics. And it's the practical application of it. You can obviously cut down and remove all the quant parts of it, which you don't care about. But for example, equities book in CFA from a level one, it will tell you everything about capital markets and help you build that foundation. And similarly, for technicals, you should look at the CMT books, because those are the books, those have been the institute since 1980s, when this field kind of started emerging and evolving. So they have been kind of building that from from the start. So, and everybody in the world, whether all the huge technical trader stars in the world, legends, they also have learned from that place or from that subject material in that book. So that's the golden source, and you should always go to the golden source before you go to anybody else.
Right. Perfect, sir. Thank you so much for that. And next question, sir. Vaibhav sir ki taraf se, how has CFA helped you in investing and trading? And do you recommend the syllabus for beginners?
Sorry, can you repeat?
Uh, so towards the beginning of this podcast, you told us that CFA has kind of helped you in your journey.
Yeah.
So Vaibhav sir wants to know, how has it helped, and do you recommend the syllabus for beginners?
Yeah, sure. So it helped me. So I've been doing CFA since my, I would say, the third year of college, and so it's been a long journey. And the way it helped me is there's a lot to capital markets outside of equities. So you get via CFA, you get to learn about everything else. And I'm a very big history buff as well, so I look at history to learn as to how things evolved. It kind of puts a gives that clarity around some things. So I look at that, and the way CFA has helped me is kind of build that foundation for me. When you talk about things like what's a discount rate, usually somebody who is not into equities, they wouldn't know that, or any of the guys that usually want how people learn these days, they go to YouTube or Twitter. Nobody's going to teach you that. Nobody's focusing on that. Everybody's focusing on stocks, and that's one of the reasons I kind of started writing threads on Twitter, because I thought that it's a good way to help people learn about the basics. Uh, so when you're going through a CFA curriculum, it will teach you about that. And from that discount rate concept, you can link it to everything else. You can link it to valuations. You can link it to even fixed income side of the business. So all of that helps you a lot. The concept of time value of money, of all of that, nobody is going to teach you if you don't go to these books. It's very hard to come by. Uh, for example, if you're reading a book on coffee can investing or anything else, these guys are not going to teach you those basics. And without getting that basics right, you may still follow that approach, but you may not be following it in the right spirit of that approach. Uh, I think that's why it's important, and that's how it helps.
Right. Perfect. Thank you so much for that, sir. Okay, मेरे पास there's a barrage of questions. I don't know which to pick. For our audience, please help us pick questions. जो tweet the a tweet is pinned on this space. The questions that you like, please like them, and I'll try to pick those with the maximum likes first because there are just too many questions for me to ask. Okay, so next, okay, this is a Sandeep sir ka question hai. In case you are tracking, matlab, in case you have a thought on any of this, your thoughts on real estate sector, inflation and recession impact in this sector.
Sure. So, like I said at the beginning, I don't believe there will be a significant slowdown of growth in emerging markets, especially in India, because or at least even in inflation part, because of the reasons I explained, like food we have taken care of, and most of our growth is consumer led, and our own economy has done pretty good, has been resilient, and even through COVID, we kind of didn't make the mistakes of giving too much stimulus to the economy. So all of that plays well in our favor. If there's a recession in the Western world, oil prices will go down. That also helps with our uh, the domestic economy. With regards to that, real estate in India should do just fine. The most amount of population in India is between the ages of 30 and 45 years of age. That's the highest portion of our demographic, and that portion is the prime uh, customer for the real estate industry. So event like that age group is going to start or has already started rather buying uh, houses. So that's why you see a revival of demand. And this industry has gone through 12 years of lull period. And a lot of changes has been made in the industry with regards to regulatory side as well as the industry side. It has consolidated a lot. So all of that plays well. On the western side, you have already seen housing demand and everything slowing down there. And for a lot of years, they were at obscene prices at that in real estate side. So there you will see a lot of demand shrinkage. So the Indian companies, which majorly cater to the western side of the real estate market via like products, for example, like Crisil and all, they may see a slowdown in their exports and things like that. But domestic market will still be good. So you can play it with housing finance companies or real estate developers or uh, housing product companies, housing furnishing companies, all of that should do well as long as they're domestic. If they're majority into exports, they may see a slowdown.
Right. Great, sir. Thank you so much for sharing that, sir. ओके सो हम लोगों के पास थोड़े से लाइक्स आने शुरू हो गए हैं कमेंट्स पे एंड अभिषेक सर का क्वेश्चन इज ऑन योर व्यू ऑन पावर सेक्टर सो इन केस यू हैव सम थॉट्स ऑन दैट सर.
Sure. Again, power sector is like very big. So you, I am playing this sector through IEX, which uh, I believe is a very good stock to play the sector too. Uh, I don't like I've studied power sector. There's a lot of problems with it. This I have written an article on my blog as well. You can read about that. It's a very detailed blog on what the Indian power industry looks like. Um, I do not think that, like, apart from the solar side of the business and the new energy side of business, I do not think there's enough things going on in the business today, in the industry today. It's mostly dominated by government-run entities. And other good thing going on in the sector, which looks investable to me, is the whole area of smart meters and the migration from our usual meters to smart meters. So there are one or two companies that you can look at that cater to that. But other than that, I don't think there's a lot happening or is invested.
Right. Uh, Great. Thank you so much for that, sir. Okay, next question is from Raghav sir, and he wants to know how to have a comprehensive view of the economy, finance, and markets, not just stock markets, but in general. And what resources do you recommend reading for this?
The only way to do that is to like get your basics right, so your fundamentals right, and build that strong foundation. So like I said, those CFA kind of books help you. Within CFA there's economics as well as a subject. Those books are very good. And read a lot. Like the best way I get brushed up on news is, and what trends is, I have a bunch of newsletters. I have a dedicated email ID where I get all those newsletters. So every morning, I kind of just go through all the like 20 something newsletters that come to my inbox on the previous day. So that's been my routine for like years now. So the more you read, the more you will start connecting. And the best part about this industry, like in our like this investing, is there's never a dull day. There's everything you can learn something. For example, all through this correction, I've learned so much about metals, how copper behaves. I've learned about emerging market index, about why the demand for dollar goes up, uh, and how it's a precursor and an indicator to risk off sentiment in the uh, equities markets, how it can, like copper, for example, going down can predict recessions, inverted yield curves, and all of that is all you're basically learning while through experiencing it. And if you have help of books around you, whether it's a CFA curriculum or these newsletters, or you learn to kind of, there's a lot of amazing blogs as well that write about things, and most of them they give it out for free. So uh, that's a pretty great way, in my opinion, to kind of learn. And there's never a dull day, so it's all good. Yeah.
Right. Thank you so much for that, sir. Okay. Next question, sir, is from Naren, sir, and he wants to know your views on banking sector.
Again, I'm not an expert in this sector, so I don't know a lot. I purposefully do not follow finance and banking firms to that extent because they're by design they are leverage entities. And most of the kind of burst happen in that sector. So the easiest way I do go about playing is I've seen the banking names today, the top three, four, they're all beaten down black and blue because the foreign institutional investors in our country are selling them. They have the highest ownership in that. So in my view, they are pretty like cheap. So I would just buy the bank Nifty index, allocate it to it, and when things kind of improve in the next 2 3 years, I'll sell it. But I don't invest in finance companies or banks or any of those, even the non NBFCs or any of those financial companies, just because they are by design leverage entities, and there are a lot of things to go wrong, and you have to really, really look at them with a magnifying lens every time. So that's why.
Right. Great. Thank you so much for answering that, sir. Okay, so this is an interesting question. It's getting a lot of likes. Trader Zombie sir का question है, and he has asked, which industries are going to benefit from China plus one?
All sorts of manufacturing industries. So uh, it's not even about China plus one. It's about manufacturing moving to a second base. So it doesn't have to get a substitute from China. It can be a substitute from Bangladesh, from Vietnam, from Indonesia, Thailand, all of those places as well. So it's just that Southeast Asia is anyways a hub for global manufacturing. So of all the manufacturing products, uh, right till now, before pandemic, everything had a one sole supplier kind of philosophy, where and companies kind of went along with it because economies of scale brought down your cost down. But when pandemic all like kind of threw a wrench into that philosophy, and they had to think about it. So that's why things are moving. So for textiles, India, for example, uh, got into a free trade agreement with Australia. So all our textile products doesn't have to go through any tax treaties or any of that. There's a free trade agreement with it. So that manufacturing, that side of the business, that industry can revive itself. Then you have from the UK as well, we are entering into a free trade agreement. We may enter into free trade agreement with US as well. So all of that bodes well for the manufacturing. So it's manufacturing for everything. You saw an impact in the chemical side in 2021 when specialty chemicals, all that business kind of, all those companies went through to absurd valuations. You see it on the pharma API side. Contract manufacturing is already booming in India. Firms like Dixon, Hindustan Foods, all of that there, whether it's electronic manufacturing or food processing and all of that, it's already doing well. So any sort of manufacturing that uh, can doesn't have a has a sole supplier base in Southeast Asia uh, has a very good chance of getting India as another second supplier. So I would say all sorts of
Right.
manufacturing will do it.
Great. Great. Thank you so much for answering that, sir. Sir, थोड़ी देर पहले we discussed a question in which you suggested that you also have a separate account for just receiving newsletters and following up on reading.
Yeah.
So उस पे एक follow up question है राघव सर का कि could you share some of the newsletters that you particularly like?
Yeah, sure. So I know Brad is on the call. He's listening. So he runs a very good newsletter called Stock Market Nerd about his companies. So that's one on my blog as well. You have a bunch of recommendations. There's a lot of guys who, like, for example, there's a newsletter called The Century of Bio, and it's written by a guy who's a PhD in biotechnology at Stanford. All the entire newsletter is just about biotech technology. So it's someone with a deep knowledge, kind of sharing his content and everything that's happening in that world. Then it's just so you can find it on my blog. A lot of recommendations that are already there. And other than these Substacks, I look at like Bloomberg has very good newsletters around. Like I think they have 20 plus newsletters. You can just pick and choose whichever you think is correct for you and suited for you. They have a newsletter, for example, on China. I've been reading that for almost 5, 6 years now, and it does a very good comprehensive updates about what's happening to Chinese economy and those stocks, which not a lot of people are prone have a knowledge about. So that's another one. Quads has very good publications. Then on YouTube, this is a hack itself that you can use. So again, you have a different ID. Just let the algorithm watch only the content that you find useful in learning about from that ID. And what that will do is basically train the algorithm to suggest you new videos around those topics. So anything related to research or sectors, I kind of use YouTube and have a dedicated ID. I don't watch like music videos, for example, through that ID. So it kind of doesn't mess up the algorithm. And all these videos, you can kind of have playlists around it. You can build your playlist and kind of just add those videos across. And another hack that I use is I have my own private Discord server where each company has its own channel, and all I do is basically just keep posting notes and collecting information if I something comes interesting comes across. So it in the end it kind of becomes like a dedicated channel with all my thoughts and documents that I collect or information I collect around the company, and all I need to do is just read through that channel whenever I kind of need to revisit something. So you can employ a bunch of things, but those are a couple of ways I'd go about.
Right. Perfect. Perfect. Thank you so much for sharing all of that, sir. Okay. Next question, sir. ये थोड़ा और broader finances का in general है, which basically asks कि how do you increase your sources of income?
Sure.
So
So
this is a space dedicated to stock markets, but I think if there was ever a guest who should answer this, it's you, I think.
sure. So with regards to your sources of income, you have to think about like there's something. So one is obviously passive, and something is that you can do as a side hustle. So the way I have gone about things is, for example, uh, like I give you a very simple example. I have a personal finance and a data visualization course. I learned a tool called Tableau, pretty like 5, 6 years ago. And I've kind of gained a mastery in it. It's something that I use for work as well. So I created a very tiny, like a 1 hour course on it and put it up on Skillshare. Earlier, like slowly and steadily, it started getting views. And every month, Skillshare sends me like $100 for it. for the viewership that comes through. So that kind of takes care about some of my expenses. So, but that's a very small example of it. You can obviously get into dividend companies. You can do something. Things like courses that told you about. It doesn't have to be at a very big, ginormous scale where it kind of supplements your income, but every little thing helps. It will get you there. And in my view, the way I have kind of built that base is I've always paid myself first, which means as soon as I get my monthly paycheck, a certain percentage of that gets automatically deposited into a savings account, which gets into automatically into mutual funds. So I've done that for 9 years running, and every year I kind of look at my expenses and figure out areas where I can cut down on useless expenses. So all of that over the years have led to a large gap between my income versus what my expenses are. These days, I save in north of 50% of my income very easily, and all of that basically helps you out. So it doesn't have to be that you create ginormous sources of second income. You can do that at a very small scale and then kind of figure out ways to kind of build on top of that.
Right. Perfect, sir. Absolutely perfect. Thank you so much for sharing that. Okay, next question is from Ayush sir, and it's an interesting question. How to learn hedging from the very scratch? CFA is the only source, or are there some books one can refer?
Uh, so I don't know about any books other than CFA. I've learned it in CFA through the options book in that. Uh, there are a couple of basic things like Zerodha has a varsity page, which can tell you, but these are again like very basics. You don't get enough knowledge in these to figure out uh, different strategies or kind of uh, learn the depth of it. Those things will only come through either CFA or you pay lakhs and lakhs rupees to some courses, which again may or may not be that good. Whereas you can get like a CFA entire curriculum for 1,500 rupees. So I would go with CFA.
Right. Perfect, sir. Okay, next sir कुछ stock specific questions हैं जिन पे likes हैं काफी सारे. So I'll quickly run them through in case you track them. We can discuss them, or otherwise we can skip them.
Sure. I would just put a caveat that I'm not a SEBI registered investment advisor. So nothing should be construed as investment advice.
Definitely, and absolutely. I also said the same thing earlier, but I will reiterate: none of this is a buy or sell recommendation. Please do your own research. This is just for educative purposes. Right. So, first one is by Sapna ji, and the question is on bearing manufacturing company. So, this is more of a sector. In case you're tracking it.
So I don't track this sector a lot. I've recently started studying it. Uh, there's a so what I can say is again related to the whole manufacturing theme, where some of the manufacturing is moving to India, and some of these small tiny bearings manufacturers are also doing exports now. So all that helps a lot. But I'm not an expert in it. I'm just started reading it, so no opinions.
Right, perfect, sir. Next, sir, Nifty Attic 5000 noob trader sir ka question hai, and he had apparently asked this question earlier as well in our spaces, but we couldn't take it up. So his question is on JSW Energy and Tata Power. He wants to know if they are fundamentally good companies and stocks to invest, and like his horizon is more like of 5 years or end of this decade. Can they be multi-baggers from this point?
Okay, I don't know if they can be multi-baggers or not. I have no opinion on GSW. They are getting into hydrogen and stuff, uh, but I don't know more about that. Tata Power, I was invested in, but I think it's very highly overvalued in my opinion. And I get the reason why Tata Power has so much, like the stock price has shot up a lot more because of the whole solar area. But all of that solar projects that they do it via their subsidiary, which has received outside investment. So eventually it will be a demerger or a separate listing. So in my opinion, If Tata Power pulls a Biocon, which is when Biocon listed Syngene separately, the Biocon investors didn't really saw anything of that, not even a preferential allotment. And Syngene today is like 75% owned by Biocon still. So you that value of yours will see a long gestation period to kind of if you're investing because of the solar business. So that's one of the reasons why I exited that stock, and it went up again. Like from my exit price, it went up 1x more. So what do I know?
Right. Thank you so much for sharing that, sir.
Yeah.
Okay. Next, sir, a question is on Dinesh sir ka question hai IIFL Securities in case you're tracking it.
No, I don't track. Like I said, finances, I
Okay.
don't track either.
Yeah. Yeah. Okay, then BK Garg sir ka question hai this IEX we kind of discussed earlier. He wants to know can we see competition in exchange power sector, specifically IEX and PTC India?
Sure. So PTC doesn't have exchange right now. They're building it, and the thing with this sector is there's a network effect in it. You can't just set up an exchange and overnight get players there. And for PTC to divert all its volumes to that, they'll have to uh, get sell the equity away. There's a rule that if you are, let's say, work coordinating on your, if you're the largest buyer or seller on your own exchange, you cannot control the exchange. So, with that regard, the whole notion of PTC will set up its own exchange and kind of divert volumes away doesn't have any legal ground to it. So that's why I believe IEX will still kind of be okay. And this market is so huge that even if three others exchange the size of IEX come up, which I don't see any way how somebody is doing that because all these exchanges like PTC and there's one more that has been there since like 10 years since IEX started, they haven't gone anywhere. These are all again government run entities. They are not designed for efficiency or doesn't have that lead of a technology. So in my view, I'm very biased towards IEX, and I don't believe there's any threat of any other exchange taking away large share of volumes and causing business deterioration to IEX.
Right. Perfect. Thank you so much for that, sir. Okay. Next question is Urvish Shah Sarka, and he wants to know if you have on Himadri Chemical and Time Technoplast.
Time Technoplus, I haven't read about it. Himadri Chemical, I haven't even heard the name. I'm hearing for the first time. So no opinions.
All right, all right. Great. So, sir, questions हम लोगों के पास बहुत सारे आ रहे हैं, but I also do want to tweak in a little bit of my questions.
Sure,
And since we are coming close to our closing time, so I'll quickly do. Let's. How about we do a quick rapid fire round
sure,
and do a few questions.
sure,
Okay. So, try to answer these without thinking, so it'll be more fun.
sure.
But yeah. Uh, if you on your birthday, which stock would you like to receive as a gift?
The index. Give me Nasdaq index
All
as
right.
much as you want.
Awesome, awesome. What was your first trade ever? Which stock or index or company did you buy in with your first investment?
Um, I mean, if you look at DMAT, that was probably shares of DMAT a couple of years back, which I sold off.
Okay.
And if you look at mutual funds, my first financial trade was SIP, which I did when I was 20 years old. So
Oh,
I
wow.
have to figure out what SIP was back then and how to do it. Yeah. And then eventually I learned there's something called a direct mutual fund as well. So then 2 years later, I moved everything from regular mutual funds to direct.
Awesome, awesome. What was your worst trade ever? Like, it may be a missed opportunity or a missed exit, or it may be some straight up goof up and fat fingers on the stock market. What was your biggest something that you regret in the market? Biggest regret somewhere.
Um, Regret wise, I regret not investing. So I knew about renewable space like before there was like it was famous. So in 2019, 2018, I was looking at it. My regret is that I didn't look deep enough in Indian markets because there were a lot of companies within the mid and small sector. Like I still did pretty okay. I found good companies at very cheap rates like Borosil Renewable and things like that. But I didn't look deep enough. So that's one of my big regrets. That even after knowing the sector, I didn't go deep enough in it.
Right. Thank you for sharing that, sir. Okay, what has been your best trade ever? Like you're really proud of. You did spot it and you were like bang on for it.
I would say it's been starting very early through SIPs. My earliest SIP was 1,000 rupees, and that was through all the stipend I had collected by during college by internships and remote work and projects and things like that. And because I started that early, I kind of forced myself to build that habit. And it's very easy to kind of get lost at the early 20s in your uh, area, and not a lot of people have that uh, uh, focus to kind of just pay themselves first and chip away. Like at that point, like 500,000 rupees doesn't seem a lot. You feel like, what are you doing? It'll never amount to a lot. But I've seen how regular SIPs and regular compounding and sticking through it for almost a decade kind of helps you build that foundation. So today I'm kind of able to take a lot of risk in the stock market, and just because I kind of started that and I have a good base now.
Right. Perfect answer. Absolutely great. Okay. Next is yeah. So your favorite trader. He may be an inspiration. He or she may be an inspiration, or just absolutely best that you find, or an investor.
Sure. So Stan Druckenmiller is something. Is one of the guys I very deeply admire in his teachings. Then Joel Greenblatt is another one, and Seth Klarman. I would say these three are the people who I kind of have read everything about, and I've kind of set Google alerts for them if they have, because they don't appear on media a lot. But whenever they do, I kind of get an alert of some new content related to that.
Awesome. Awesome. So you said you don't track technicals much, but fundamentals you do. So what are your top three things to look for fundamentally in a company?
I wouldn't say there's anything top three. You have to look at everything. So I look at things like float. I look at what the history of the company is. One of the areas that I would stress a lot is the history of the company. Not a lot of people kind of go through the history or bother to kind of go through 10 years back history of the company. And but the history of a company can teach you a lot uh, about how the management kind of behaved when during distress times, during times of great optimism and bull markets and bear markets. So that's one area I look at entire financials. I look at things like float, pretty obvious things like debt and stuff. I study go through auditors' reports. So it has to be holistic. There's never a formula in finance that buy above this PE, sell below this PE. It doesn't work. Everybody since like has when they come in, they always try to look for a formula, but there is none. You will never find a formula. Every company is different. Every industry is different. Um, the reason why, for example, IEX can command a higher price and it may be cheap at 30 times earnings, whereas a commodity or a steel company might be very expensive at 30 times earnings or four times, five times book value. So it's you have to you can't apply a single formula to everything. You have to look at it in context, and that will only come when your foundations are strong.
Absolutely perfect, sir. Right. So we are very close to our closing time. So my final question is, I would love to have a quick, short concluding remark from it, maybe an advice for us, a suggestion for us. Most of us, at least me, I still am very new to markets and I'm still very much a learner. So some final advice from you to retail investors who are new to markets like me.
Know your goal, and like for example, most people I know, they just want a like when I interact with new investors, like they want a target return, they want 20% return or 25% CAGR, but they don't know why. For example, if you let's say have 1 CR in bank, and you want to make it to, let's say, 6 CRs by the 10 years, you need like a less than 15% kind of a return. You don't need to bother yourself with FNO in that regard. So know what your return, what your goal post is, and then work backwards from there as to where you are today, where you want to be 10 years or 20 years or whatever your goal is, and what that means in terms of actual percentage. And from there on, kind of figure out what works for you. That's why for majority of the people, index funds and investing in the index passively and doing SIPs will work tremendously well if you just learn a little bit things about how to look at select investment managers or which fund is good, or what is an expense ratio. That amount of effort is like probably a few hours worth of effort compared to decades that you may put in the stock market, and which not maybe not necessary, because if you want 10-12% returns, then why bother that with all of that? That's basically my last.
Sharing all of that with us. And I mean, this is our closing time, but I really, really want to continue. I have so many more questions to you, and हमारी audience के इतने सारे questions हैं जो कि pending में रह गए हैं. I really apologize to our audience who asked us such nice questions. We couldn't take them up for the lack of time. But I would request Tariq sir, please allow us to host you again sometime. We'll discuss a lot more. We'd
Sure.
love to learn from you a lot more.
Yeah, definitely. We'll do this again someday.
Awesome, awesome,
And
awesome.
thank you for having me.
Right. So this has been our time. Thank you so much, Tariq sir, again for making out time for us. It was a great, fun learning session. And of course, our lovely audience, thank you so much for being with us all throughout. At one point, I think we had over 250 listeners.
That's
This has
awesome.
been amazing. Thank you so much, everybody, and especially Tariq sir.
Thank you. Thank you, everybody.
All right. Bye bye, everybody. Have a really profitable day tomorrow and a really good night now. Bye bye.